Hi, and welcome again to another edition of Market Analysis for today, December 15th, 2023. I'm Giovanni Benacourt, analyst, trader, and educator with Vantage Markets. As 2024 rapidly approaches, there is plenty for stock investors to be grateful for over the holiday season. The biggest, surely, this week's big final Federal Reserve pivot away from the interest rate increases and toward cuts. Now, that has given stocks an extra lift, while bond yields and mortgage rates have fallen. It's very good news. It helps that energy costs are staying lower. The worry at the beginning of the year was whether oil prices would manage to keep fueling inflation after spiking in 2022. But even with the Organization of Petroleum Exporting Countries limiting output, prices are finishing the year down more than 10%. Economic growth has been robust and consumer spending hasn't collapsed, even as people ran down pandemic savings and interest rates went much higher this year. Given all that joy, it's clear why the S&P 500 is now just a whisker away from its record high reached at the very start of 2022. Now, it has almost completely recovered from that horrible year, and the gains are spreading out from the big companies that have driven much of the rally. Now, here's a sobering thought. All these positives can also be turning into causes for concern. The Fed has signaled a pivot, but it's not a promise. Central banks in Europe are still in higher for longer mode, even though their economies appear much weaker. OPEC may become more determined to prop up oil prices. It certainly has the power to do so, even if it currently lacks discipline. And if oil prices do stay lower, that's not great for the energy companies, the shares of which have performed well so far despite a weak market. So indeed, the big risk for 2024 is that all the good news is already priced into the stock market. Any surprises are more likely to be on the negative side than the positive side. With that being said, let's take a look at the fluctuation for the markets today. So we are looking at NASDAQ. So NASDAQ yesterday, it almost reached our nicely placed resistance, which was around 17,000. It was shy, but at least let's see if today be any difference? Will at least today we'll revisit yesterday's high, or we'll just revisit yesterday's low, or will we just stay hovering, idling, just consolidation? It's a weekend, it's Friday, so that could also be a chance. Here's the S&P, the same token for the S&P, but we have already revisited yesterday's high. So today, can we see a revisit to yesterday's low and some, even lower? I still think that could happen, but I still think that 4,760 is going to be that pivot point. So also, I think the market are going to be just sideways moving today. The Dow is flat, and now the Dow is expected to have just to do a pullback, a retracement, a healthy retracement. Those healthy retracements, if we use the Fibonacci retracement tool and we measured the movement so far, the entire movement, usually 0.38% will be a number where you can look for a chance for the market to reverse. So if it's trading, it's going to trade down to 0.38, which is 37,381 for the Dow. That's the 0.38%. So if this level comes down, the market, this is where you can be alerted if the market can do a retracement and go back higher, and it bounce off of this one. Now, if it does break and trades lower than from this, then the reason of the Fibonacci tool is because we used then the golden number, which is 0.618%, and that'll be around 37,134. Okay, so that could also be an area, or some people use the 0.50, but the 0.50 is not a Fibonacci number. So let's see if that would be a healthy pullback. Okay, it has been, it made historic highs. So there's got to be a moment for all of those that have been long to take money off the table. And the only way to do that is by selling their positions, the profitable positions. So that could make a panic of people selling, which probably is what we saw here already. Okay, now that's the case. Is this is an opportunity, a trade signal? Will we continue to move higher, or will we just drop and then keep that in mind? That point 38, 37,261. Let's see what will happen. Then we have crude oil. So crude oil bouncing off that around 67.70. All right. So it took crude oil actually 2 days to recover what it traded or what it lost in one day. So again, I'm looking, it's Friday. Okay. So I read somewhere that the hedge funds have their worst week on shorts on the market because of the movement to the upside. So petroleum hedge funds could also be seen looking to make a buck or recover from that. So let's see if that will be the level where they will continue to make another short and the market will drop back to 70, or will the market just make a pop, trade above 73.50, or will the market just again stay sideways? Then natural gas is more looking better or has more momentum behind it. So I'm gonna raise my, you see this double top right here? I'm gonna use that as a possible resistance level also. So also when I'm drawing my lines, my support, my resistance, market's open. I look for those formations from the past. Okay, like the gap. That's why I had it down here, because that's where the initial of the gap. I say, okay, around this area, the market will probably come to it and retrace, and that's what it's doing right now. If you look at it better, I had it before right here, and I moved it over here, but when I had it somewhere around here. So that's what I was saying. The market could probably come in, close this gap, and or find that a lot of the void data here and into that void, come in and retrace. And before we get into it, well, it actually is in that area of all of this gap. So a pullback, how much of a pullback could we see? Well, 0.38%. Then we see here gold. Gold also is doing a pullback right now. So let's see if 2020, being a psychological round number, it will be that initial support level for a half man at 2,000. But I'm staying out of gold. I think it's going to be just idling. Also silver, just sideways movement. The same token for copper, even though it has had a stronger fluctuation so far today. And then we have the Bitcoin that has created a channel, a $2,000 channel between 43 and 41. I think that's going to be bouncing up like a JoJo. And then we have the currency that after reaching 110 yesterday is retracing, doing a pretty good deep retracement. Now let's use the retracement tool and let's calculate the whole movement from a positive candle to the high that it was made yesterday. So look, 0.38% is where we're coming towards to. Okay, we've been there before. It did rebound from there. So will the market continue and move towards the area of the Fibonacci golden number? Then stay tuned. Take a trade. Then we have here pound also looking for that retracement, and that could happen if we continue to see the dollar index continue to recuperate. Going back over to 102.550, you'll see a further down towards the 126.5 pound and towards the 108 800 ish. Even at my support, it will bring down the dollar. The euro will also come down to that level. All right, well, that's it for me today. Have a great weekend, and I'll see you on Monday.